Hello and welcome to another update video about Doge. So Doge went straight through support, and here you can see how useful a stop loss just below 10 cents would have been, because I told you that we had a chance to rally here in a fifth wave from the yellow support box. Yeah, so obviously what we were waiting for with Doge to confirm that we were in let's say a possible breakout pattern, we wanted to see 5 waves up. We needed to see those 5 waves up. Until you get 5 waves to the upside, you can't really confirm that something is in a bullish breakout pattern as per the Elliott wave method. That's why it's so useful, because you can get much more confidence in a chart as soon as you see 5 waves. Gave you here the yellow support area, in which I said if it turns around in a wave 5, it ideally needs to do it here. Shouldn't really go below that. And we came down pretty much to that 10 cent level, which was the lower support in the box, and drop below it. And you can see how useful a stop loss below that level would have been. And that's exactly the benefit of the Elliott waves. You can enter a trade with very low, let's say, risk, but higher reward, if you know where those invalidation points are, or below which levels a move is getting much less likely. And that would have been here. A move below 10 cents made a direct breakout much less likely. It's not ideal that we've dropped that far, I have to say that as well, and we take a look at the possibilities now. So the scenario was that this could have been a wave 1, here a 2, here a 3, here a 4, which should have bottomed above 10 cents, and then a move up in 5. That would have been the ideal pattern that would have given us much more confidence in Dogecoin, okay? The problem that we have now is that we've dropped below this area, and because we've dropped below 10 cents, this is not a great scenario anymore, and it has basically lost in credibility and takes away some confidence, because it is obviously what we are looking for is the ideal charts, right? Ideal wave patterns, ideal scenarios that we can trust, and with the drop below that 10 cent level, it is most likely not a wave 4 anymore, because the wave 4 would normally not drop below the 50% FIB level. Now, okay, we can say we had special events in the last few days, and that is exactly the only reason why I consider here a deeper wave 4. This is possible not in an impulsive wave pattern anymore, but in a diagonal. So a so-called diagonal pattern is possible here, where we say all of this is some kind of a weird ascending broadening wedge. These do exist, or channel, and in these patterns you can count this move as a diagonal pattern, where you are also allowed to have an overlap between wave 1 and 4. Problem with diagonal patterns is, and that's exactly the reason why I don't like to use them very often, but they are not too rare in a wave 1 of crypto. Yeah, when after a downtrend, they are not rare. Oh, well, not too rare. So we have to consider them. And that would imply that from here we have another chance to start a wave 5. It is nothing though that I would put a lot of emphasis on, and I would not really trust the chart until I see those 5 waves, which means my personal, let's say, rule, or, you know, of course this can be traded, but the point is that it just will have a much more higher likelihood that we actually are in a breakout pattern when we finally see this wave 5. That means for anybody who wants confirmation, could wait for the 5th wave to play out. Now bear in mind, this could rally, or that this could double, yeah, in this 5th wave, so it could double easily. But yeah, you know, that is what we, when will I be able to confirm that the bottom is in? Well, first of all, I would want some confidence in that we make a 5th wave to the upside. Target could be the resistance area of this channel here, so around, let's say if that happened today, we'd be talking about 16 to 17 cents. Yeah, and then this would form the wave 1, and then I would want to see a move down in wave 2, and the wave 2 support area could then be bought as a long trade. The problem here is we haven't really seen that 5th wave, so we've only had 3 waves up, which increases the risk that we are in the red count. Wave 3 down, wave 4 up in a corrective pattern, WXY, and we're now coming down in wave 5. Yeah. So what we need to understand, it's technically still possible to rally in a wave 5, but I would like to see that first now happen before I get more confident in this chart. It would have been ideal to make the move from here. This would have given us 5 clear waves, and I would say now that this is a clear entry point because it is then the wave 2. Do you know what I mean? So had we really seen that 5th wave already, and we had seen the wave 1, then we would be in the wave 2 drop now. And I would confirm this is, for me personally, a great entry point because you have a clear 1-2 setup. Here we don't have one. I hope that is clear. There is one more possibility to count this in a bullish way, where we can say we had a 1-2 setup here and another 1-2 setup here. That's possible. And that would allow us to define it as a possible entry point, a 1-2-1-2 setup. That would be the bullish interpretation, because we did hold the 78.6% Fibonacci retracement. But also 1-2-1-2 setups, they are not ideal because they are, if you have such a deep wave 2 in, let's say in the second 1-2 setup, it just, again, it loses credibility a little bit. But yeah, by all means, what I can tell you, we're close to support. So I won't tell you not to do anything. This is entirely up to you. There's a few things to point out. If this is a bullish pattern, we have come close to support. Yeah, we are currently in the region between the 78.6 and the 61.8 Fibonacci retrace. So if we drop below, out of the channel to the downside, that's probably it. This idea or this view here allows you to set a stop loss quite clearly defined somewhere below that wave low here. So below 7 cents. Now I'm not telling you to do it, you need to decide that, but this is a low risk, you could say a low risk, high reward setup, not necessarily in probability to work out, but in terms of you can set a tight stop loss because you have a very clearly defined invalidation point, and the reward, you know, it could double. So you could potentially risk, let's say, 2 cents for a possible 8 cents profit, right? Just to give you an idea. But all I'm saying is this is not high confidence in terms of probability of working out. We will have much more probability of working out as soon as we see the 5th wave up, and then by the wave 2 retracing, the wave 2 target area. Yeah. If we now go below below yesterday's low at 7 cents and below the trend line, I think then it's quite clear. Then we are losing support, and we have a big risk to retest the 5 cent level, the June low, and will most likely break it. Okay, and that's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.